word headline hit, most people think one thing, and that's market crash. But that's not how market actually work. See, market don't move off emotions; they move off money flow. So let me break this down in simple terms so you can be able to understand what's going on. When geopolitical tension rises, three things usually happen. Money moves to safety, oil reacts, and stocks adjust expectations. That's it. So first is safety. When uncertainty increases, big money doesn't gamble, it protects. And protection usually means gold, the US dollar, and bonds. Gold is insurance, the dollar is liquidity. Bonds are protection. That doesn't mean the system is collapsing. It means investors are repositioning. Very different. Second is oil. Iran is a major oil producing region. Any disruption, even the possibility of it, can push oil prices higher. Even when oil rises, inflation concern rises. And when inflation rises, stocks can feel like very pressure. Not because everything is ending, but because growth becomes more expensive. Now let's talk about stocks. So stocks don't crash just because of war headlines. They reprice based on future expectations. The real question is this fear? Or is this structural damage? Because 2008 was a credit collapse. This is a geopolitical risk event, two completely different environments. So instead of guessing, let's look at, structure. Is gold breaking higher? Is the dollar holding strength? And is S&P actually breaking weekly structure? Or is it just volatility? Because until structure breaks, this is rotation, not collapse. So let's go into the chart to dive in deeper and see what's actually going on. All right, so let's dive deeper into the chart so we can be able to trade smart into next trading week. So as we can see, gold actually closed bullish this week, with support gold to continue to move higher. Next week, if we do continue to remain above 5,000 over time, we could be seeing gold continue to reach towards 6,000. Let's look at DXY. DXY is currently in a transition phase. If DXY remain below this resistance, then we could be seeing DXY continue to push down lower. But once it break above, this is not. Let's see what this level is. This is 97,633. If it can get above that, then we could be seeing price start pushing back up towards 99.907. And if it get above that, then we could be seeing DXY definitely continue to push up higher. All right, and then we have oil. Oil is in a nice uptrend, so as long as it continue to respect structure, then we could be seeing oil continue to push up higher. We did close bullish too, so that support oil to continue to push up higher into next week. S&P as well. S&P is in a nice little trend, but it's in a slow transition. So if it do break below 6,800, then we could be seeing S&P continue to drop lower. And then we have the VIX as well. With the VIX, right now the VIX is at around 19. If it breaks above 22 just from history, usually when it get way above 22, then we could be seeing S&P drop even lower. Now this is a fast version for y'all people who have short attention span. So you want to see the longer version of this video in more detail, just go watch my previous video before.